Ladies and gentlemen, another month has passed. We are back to our monthly interview with Egon von Greyerz, this time in obviously a totally different location. Egon, I see snow in your background. I don't have a piece of snow. Where are you and how are you?
Jan, good to speak to you again. I'm in the Swiss Alps. I'm in Zermatt. And this is where the Matterhorn is, and that's obviously where the name of our company came from, Matterhorn Asset Management. So this is where it all started a long time ago, and I'm here. I had a couple of days off with some friends here, but today has been a whiteout, just snowstorm and high wind. So no skiing. So nice opportunity to speak to you instead and talk about the world.
Egon, did you notice I just saw that the Standard & Poor's made a fresh high and the Dow Jones is not far away, 20 points or so. It seems to me that the Corona party is in full swing and the music on the Titanic is still playing. I call this a big cognitive dissonance. What do you say?
I say I agree with you. I think we are on, or not we, but investors are living on cloud cuckoo land. That means that they are on a different planet. I think that the world hasn't realized the seriousness of the situation. Now, we don't know the truth about the coronavirus at all. But, you hear figures from, the official figures are 1,000 dead. Unofficial figures are anywhere from 25,000 to 400,000, and none of them are confirmed. We don't know. The authorities certainly are not actually telling us the truth. It's all in a very thick fog, like behind me here with the snowstorm we've had. So we don't know where we are. What we do know is, though, Jan, that this is an extremely high risk. Remember that 80% of Chinese manufacturing is on a shutdown. 90% of the export industry on a shutdown. A lot of people are 400 million, they say, are quarantined. And that clearly, whatever solution that the world will find, short-term or medium-term, and we have no solution in sight yet, but whatever solution comes at some point, this is going to affect the world economy drastically. So as you said, there is total detachment between markets and reality, but that's not unusual. But markets go up until they turn, and they turn all of a sudden. And whether it's possible that markets turn good news or bad news into good news, because now they think, okay, if this continues, there's going to be so much money printed. But as we discussed before, Jan, printed money, worthless printed money, is not going to solve anything. And this could, the coronavirus could be another one of the many risks or catalysts that turns the world around. And whether now the Dow psychologically is going to be pushed up to 30,000 just for the sake of it, who knows? It doesn't matter. At some point, we're going to see that black swan event. We're seeing it now, but it's actually going to affect the market. And all of a sudden, markets will turn. Stock markets will crash, dollar will crash, bond markets will crash. That's going to come. Whether it comes today or in a few weeks' time makes no difference. The risk is at an absolute maximum, and investors should really take heed of these warnings and not believe that it will continue.
And you just mentioned a detachment, and I found a very interesting graphics that you also used in one of your recent articles. I show it to our audience. Here we see this graphics, and I told you at the beginning that the Standard & Poor's that we see here on the right side just made a fresh high at 3,370 and something. So we are now here at the X already, and the red line is the profits. So we see here the profits against the stock market, and similarly here at the late 90s that led to the crash, to the change of the century crash, the dot-com bubble, we had a big disconnect between the markets and the profits. So it was still rising when the profits came down. Now we are here, so the gap is even wider, but usually it tends to catch up.
Yeah, You know, as we're showing here, you know, profit started to plateau around 2011-12. So we've had 6-7 years now of profits going virtually sideways, where the market's continuing up. And so that means that PE ratios, price earning ratios, are expanding. They're going up. So therefore, the market is becoming more and more expensive by the day as prices go up, but profits don't go up. So we're talking about now bubble markets. And if you're talking about bubble markets in a world economy which is already totally overvalued, overbought, and dependent on debt, it's not going to end well. I'm extremely concerned here, and I think that we are very near something happening. Now, very near can be longer than we all expect, but whether that's days or a few weeks, it doesn't matter. The risk is at a maximum right now.
Mm-hmm. And I prepared another very interesting graphic because we mentioned those Dow Jones Gold ratio in the past interviews a couple of times already. And I found something very interesting that is a proof for the theory and the fact that the paper money itself makes the swings much bigger and more dangerous for investors. I go to the next chart. You're going to look at this. It's a very interesting graphic that is the proof for me that with the start of the Federal Reserve in 1913, here we see the gold ratio, the Dow Jones gold ratio before this area, and when the Dow Jones didn't exist, they recalculated it with other data. But after start of the fiat money era, the swings became much wider, and I think here it already tried to break down to the downside, and it was pumped up again. And if we expect it's remaining within this triangle, then it should really hit one or even lower.
Yes, absolutely. And I've written about this many times, and that as you say, in 1980, the ratio, which is a Dow gold ratio, which means the Dow Jones index divided by gold, reached 1-to-1, which means that the Dow was $850 and gold was $850. Now, if you extrapolate that red line there and a couple of years forward, you get down to almost a half, actually, the support line at the bottom. And so we have that correction that we've seen since 2011, basically, the Dow increasing and gold losing. That correction, I think, is finished. It's already turned down. You don't see that on the long-term chart here, but it has turned down. And I think we saw the same type of correction. If you, you could stay on the chart. We saw that after when we went into the 2011 bottom of this ratio, when it went to 1-to-1. So we saw the same type of correction, and then it crashed. So I expect that crash to happen, and that means, Jan, that stocks are going to crash against gold 95%. Basically, if we go down to 0.5%, 95%. And I think that's a reality. Remember that, for example, when we have big crashes like in 1929 to 32, the Dow crashed just in itself, not against gold, but in itself, the Dow crashed 90%. So to see a 95% crash against gold now in a bubble, which is many times greater than in the late 20s, early 30s, I think that's totally realistic. Nobody will believe it at this point, but I think it's going to happen. And therefore, if you think about that, you think what the risk is in the world, people must now realize that, first of all, study history. I tell people, study history, because history tells us that when risk is at an extreme as it is now, paper money will be totally destroyed, and we are going to see the most massive money printing bonanza ever in history, which will totally destroy the value of paper money. And we've seen that, even now, Jan, if you look at the gold in euros, gold in pounds, gold in Canadian dollar, Australian dollar, etc., is making new highs right now. partly because the dollar is slightly stronger, but that's just temporary. The dollar will also weaken. When the dollar starts to weaken in the next phase, and I don't think that's far away, then gold will go up much faster also. So, it's happening already now, and most people in the world, as we know, don't own any gold and have no intention of buying gold. But luckily, at least, the people who follow us on Gold Site, and they know the value of gold. But right now, I'd recommend it in 2002 for people to hold up to 50% of their financial assets in gold. I now think that should be higher because I don't see any other way of protecting your assets right now with the risk that we see around us.
And Egon, we see that something is happening in the metals market at the palladium price. I only want to mention this briefly. In the Morgan report, there was a little paragraph where David Morgan wrote about it, that something is wrong in the London Metals Exchange. There's a real lack in physical metal, and this could spread over or spill over to, at one day, to the gold and silver market. So something similar could happen. And silver is very cheap. We had a separate video about this some months ago. It's still cheap. The gold-silver ratio is again very high. So gold and silver obviously are both very attractive at the current prices. And I have another little graphic from a recent article. I show it here. This is taken from an article from Stephen Santangelo from the 3rd of February. And he wrote there that the amount of freshly so-called printed money by the Federal Reserve in the last 4 months or so, in the value of over 400 billion US dollar, equals 9 times the total above ground available silver, physical silver. Shows me we are still cognitive dissonance in a completely mad world.
Yes, no, I totally agree. I mean, silver is dramatically undervalued, especially since we have to remember that the majority of all silver in the world is consumed. It's for industrial use, and then it disappears. It's just washed away, basically. Obviously, there is some silverware and silver jewelry, etc., but the majority just disappears. So that means, there is an enormous shortage of silver, and at some point, silver will become gold on steroids, which means that silver will go up dramatically faster than gold. And I think, if the ratios, gold-silver ratios are almost at 90 now, which is where it is at the very peak normally, historically. And so I think the next move down is going to go to 30, where it was in 2011. That means that silver will move 3 times as fast as gold, Jan, which is dramatic. So yes, silver definitely has an enormous potential, especially since there won't be stock around for people to buy. So that's why when it starts jumping, it could jump up. You could jump up by dollars or by tens of dollars silver. And I had a target many years ago already when if gold reaches 10,000, which I think is the minimum. And the ratio goes back to 15, which is the historical ratio. 30 is the ratio where we reached in 2011, but I think 15 is very realistic too. Then silver will be $666, $666 silver if gold goes to 10,000. All right, still that remains to be seen, but I think those targets are very realistic. But investors have to remember that silver is extremely volatile. It moves very, very fast on the upside, but the corrections are vicious. And therefore, my view is still that, if you hold silver, hold more gold because it's safer, it's less volatile, and you sleep better at night with gold than with silver. But to hold some silver, let's say 20, 25% of your total metal holding, that I think is very responsible and probably a good thing right now, bearing in mind this very cheap silver price currently.
And Egon, before we close, I wrote down some information about the China case you mentioned at the beginning already, and I will put some links below the video also. This is a dangerous situation, and I saw it from my own experience today that shops are becoming empty. I mean, a toy shop. A lot of stuff comes from China. many things that are not essential, obviously, like toys. But I read also recently that the Shanghai Metal Exchange, they have huge deposits of base metals because they simply do not use it anymore. So the supply chain is already crumbling, and this is nowhere reflected in the big stock indices that we just discussed at a brand new high. It seems to me that those cognitive dissonance, they want to get out the last points. It's also a case of greed, and not taking into consideration that once this breaks, they will not have a chance to get into the gold market. It will go up so fast, and maybe other problems to buy gold. I think who has not entered the market yet should really do it now.
Yes, no, you're absolutely right. But the effect that this will have on world trade is just enormous. People think it's just that right now, people in the West think it's a disease that hasn't reached us yet, and it's just a disease. But you know, coming back to China, as you said, the China is the factory of the world. I mean, this is, you know, a major part of US manufacturing moved to China. And so that supply chain is now shut off with as I said, at least 80% of manufacturing totally locked down. And you know, the effect that will have on world trade is just absolutely ginormous. And therefore, I think people should really think about now how they protect themselves, because we are very near a massive level of QE or money printing by all central banks. And this is why now gold is already going up in all currencies except for the dollar yet, but that will happen. So I'm extremely concerned about what's happening now. And I think protection is absolutely essential. Forget about the fact that the markets are reaching new highs. You're not going to get hold of gold and silver at anywhere near these prices when things turn, because they will shoot up so fast. And whether that happens tomorrow or in a few weeks doesn't really matter. Protection should be taken now, in my view.
Egon, and I would recommend our visitors or our audience also to think about getting some essential stuff into their household. If you see from China how quickly the grocery stores became empty, what would happen if we have a lockdown and you could not get anything for the next 2 and 4 weeks? Who is prepared? I would say not many, and I can only recommend to think a bit more or a bit far further than the majority. Expect the best or hope for the best and prepare for the worst. Egon, thanks. And nevertheless, as you always say, enjoy life, go skiing, enjoy the beautiful countryside, and who knows what will have happened when we talk next time. Adios.
Well, Jan, it's good to talk to you. And we don't want to frighten people.
No.
We're just telling people, you know, because we don't want to be scaremongering here, but we're just saying that the risk is high. Take protection against the risk. Hope that, as you said, it's not going to happen, but at least be prepared. That's all we're saying. And in the meantime, you know, let's enjoy life, even if it's like a whiteout, as we call it today. But you know, there are always good things in life. So let's enjoy that, but be prepared. That's what I say. Study history and be prepared.
Yes. Thanks, Egon. Till next month.
Jan, thanks very much. Good to speak to you as always. Thank you.
Bye-bye. Bye.
Bye.